Welcome back and thank you so much for staying with SABC News. You're watching On Point. Standard Bank has reported a 4% jump in annual profit. Its South Africa operations grew 11%. The bank says GNU and stable Eskom boosted confidence. It says client activity went up together with improving credit trends. Its net income grew 2%, as well as the growth in loans and advances that also grew 2% due to lower consumer affordability and demand for credit. This is as interest rates remained high on average last year. For more on the results, I'm joined by Standard Bank Deputy CEO Kenny Fihla. Kenny, thank you so much for joining us on Point. And we'd like to find out about, firstly, before we even get to the Standard Bank results, your reaction to the budget and how you expect VAT changes to impact your customers in particular.
Thank you very much for that, Tiabo, and good afternoon to the listeners. We would have loved to see the budget being passed, first time around, but we're where we are. We think that the engagements in Parliament and that the maturity that the political parties have will result in ultimately some compromise being found and ultimately the country being able to pass a budget. The proposals that have been made, we think, given the difficult constraint that the country has to deal with, clearly difficult choices have to be made. Some of those choices are not necessarily what we would have preferred, but when everything is said and done, we think that the budget shouldn't detract from the projected GDP growth of South Africa, and that if the government stays the course and the country stays the course, we should see the economy growing over a period of time and ultimately creating jobs and resulting in a better life, not just for corporates, but also for the people of South Africa.
Yeah. Speaking of a better life for corporates, you've reported an increase in profits. Analysts do say that it obviously comes off a much more higher base and that it's much more muted than they would have expected it. But take us through the operating environments and what contributed to a boost in profit.
We had an exceptional performance in 2023 across all our geographies and across all our businesses. So we went into 2024 knowing fully well that it's going to be a very, very difficult year just to stand still. And we're pleased that our South African business performed exceptionally well. And it actually was able to mitigate the risk that we saw coming from places like Nigeria, Angola, Malawi, Zimbabwe, and Zambia, where we had massive currency headwinds. The strength of the South African business and the good performance from East Africa helped to mitigate that risk. And that speaks to the power of a diversified business that Standard Bank has, both in terms of geography as well as across the different business lines. We also had to contend with various elections in a number of countries within which we operate.
Yeah.
And we're glad that many of those went very, very smoothly and that the outcomes were accepted without any major upheaval by Mozambique. But even in Mozambique, we're starting to see some green shoots, and we hope that they'll be able to stabilize the environment so that the real development and the potential that country has can be captured through the development of their own gas reserves.
Yeah. Back to your profits in South Africa and your operations here. In your statement, the group says that to an extent the increase in profits was propped up by client activity and credit trends. What did this tell you about the state of the South African consumer at this point?
It's a mixed picture. The consumer is still under strain, just given the heightened interest rate environment and given the high unemployment levels that we have. But the environment is starting to be a bit positive. The early delinquents, which is really the early defaults that we tend to see in our loan book, is definitely coming down, which means consumers are beginning to be slightly better off relative to where they were, say, a year ago. We are also seeing an increased demand for credit in the home loan space, which is why the growth of that book accelerated in the second half of the year. What was more pleasing in South Africa was the actual asset book growth in our corporate and investment banking business. And that's important Because if corporates are investing, that tends to create more jobs, it stimulates greater productivity, and consequently result in a significantly higher GDP growth. So we don't just look at the consumer alone, but we look at all segments of our client base and watch what behavior we're seeing from those. So it is encouraging that there's some positive green shoot on the consumer side and definitely strong demand for credit in the corporate space.
Kenny, I'm keen to hear your thoughts about the currency and the currency fluctuations, which to an extent did also impact on your numbers. So given the state of the international things that are happening, we're looking at possible trade wars in other markets and how those could eventually have an effect on the currency, the rand specifically. How concerned are you about this for the remainder for 2025?
We remain concerned about any sign of heightened trade wars because we think that the imposition of tariffs across the board will result in global inflation ticking up and consequently will make life miserable for day-to-day people who ought to buy basic services as a result of added duties that are imposed on those imported commodities. So we think that tariffs would be bad for the consumer. The rand, though, has held up exceptionally well under the circumstances. And we think that if the various engagements continue to take place, if we do not see an escalation in the imposition of tariffs, that ultimately South Africa should weather the storm and come out of this difficult situation in a substantially better and stronger position. We're also worried about the impact of the global instability and volatility on the various African currencies. We have seen a significant weakening of the Naira last year. We saw a weakening of the the Kwanza in Angola. But we think that the West is behind us. When our economists look at the future, they think that those economies are starting to look better. They think that the inflation is coming down, and consequently, currencies should be more or less stable in 2025 relative to where they were in 2024. But no one knows really, just given how quickly things can change, and given that these risks, especially geopolitics, have not yet abated.
Yeah, thank you so much for your views. But Kenny Fihla is the Deputy CEO at Standard Bank, and he's been sharing his views on the financial results that they have published earlier this morning, and also his views on a range of other economy-linked things.